Hi, it's Brian Jessen with Wintrust Mortgage. Here's your Friday, April 26th update. Let's start with inflation. The biggest gauge that they follow the Fed is personal consumption expenditures, PCE, up a little bit from February to March. So that trend of inflation going up year over year went from 2.5 to 2.7. So that ties in the Fed. They're meeting next week. No change in rates is expected because the economy is still expanding and their higher for longer stays in play. We'll see if they make any commentary about what's going to happen later on this year. Economy is slowing down. The gross domestic product of all of our production really went down the first quarter compared to third or fourth quarter of last year, but inflation is still sticky, staying 3 or 4%. They want 2%. So you have this slowing economy, inflation's staying elevated. So we'll talk about that in a sec. Mortgages, last 2 months, rates are up about 0.75%, kind of a reaction to this slightly increasing inflation. But they might have peaked. We're kind of might be at that point where at point of resistance. We'll have to see. What's up next? Real estate market is still strong. Lots of people wanting to buy, not a ton of inventory, but a little bit more inventory staying on the market and coming on the market. Stock market, kind of a small corrective phase, maybe as much as 10%. We'll have to see how that lays out. But I went to an economic seminar this week. They were talking about that. Federal debts, we're issuing a lot of treasury securities. That's an issue because that's keeping mortgages elevated because we have so much federal debt. And lastly, what ties into this is stagflation. It's not happening yet, but we could be where the economy is slowing down, inflation continues to slowly go up. See if that actually is something they continue to talk about. Brian Jessen, Wintrust Mortgage. Let's have a conversation. Please like and share this video and have a good weekend. Bye now.